Hello everyone, and welcome to this SAGE training session on COVID-19 and understanding the UK government help for businesses. So let's take a look at the agenda, what we're going to cover in this session. The purpose of this training is to discuss the government support initiatives in response to COVID-19, and we'll cover them in the following order. Starting with the Job Retention Scheme, more commonly referred to as 80% of wages reimbursed. Then we'll move on to SSP changes, government-backed loans, VAT deferral, support for self-employed individuals, time to pay arrangements, tax payment options, business rates relief, grants for eligible SMEs, and finally the IR35 delay until April 2021. Okay, let's make a start then by looking at the Job Retention Scheme. This applies to employers with workers who've been unable to work due to coronavirus, and the employee is described as furloughed. Furloughed refers to any employees who've been asked not to work but have not been made redundant or laid off, so they remain on your payroll. The government will cover up to 80% of the wages of these furloughed workers, up to a maximum of £2,500 per employee per month. This is available to all UK employers with a PAYE scheme, regardless of size, and includes the public sector, local authorities and charities. Employers can choose to top these salaries up to their normal amount should they wish to, but this is not mandatory. The Coronavirus Job Retention Scheme will cover the cost of wages backdated to March the 1st and is initially open for 3 months, but will be extended if necessary. You will need to designate which of your employees are furloughed workers and notify them of this change, which based on their contract may be subject to negotiation. An online portal is currently being developed for submitting details of furloughed workers. Once HMRC have the online portal up and running, you will submit the details of these employees along with their earnings. You'll then make payments to the employees, either of the lower 80% amount or a topped up amount should you wish to do so, then apply to reclaim the 80% figure through the portal. HMRC are hoping the first grant payments can be made by the end of April. If your business needs short-term cash flow support, you may be eligible for a coronavirus business interruption loan, which is covered later. Moving on then, let's take a look at the changes to statutory sick pay. As the government has stated that individuals with symptoms of COVID-19 who have had suspected exposure to another individual with symptoms should self-isolate for up to 14 days, advice has been given to employers that in these circumstances, those employees are eligible to receive statutory sick pay even if they're not ill themselves. In addition, rather than have the first 3 days of this period as waiting days, those days will also be able to be paid as SSP. Employers will be able to reclaim up to 2 weeks statutory sick pay per employee who needs to self-isolate. This applies to UK-based employers with fewer than 250 employees as of the 28th of February 2020. The reclaim process for this is currently under development by the UK government, and they will work with employers over the coming months to set up the repayment mechanism. As mentioned during the Job Retention Scheme section, let's now cover the Coronavirus Business Interruption Loan Scheme, or CBILS. The Chancellor has announced a £330 billion package of government-backed loans. Any business who needs access to cash will be able to access a government-backed loan on attractive terms. This applies to SMEs with UK-based business activity and an annual turnover no more than £45 million and who have no more than 250 employees. These businesses make up 99% of all businesses operating in the UK. The loans include term loans, overdrafts, asset finance and invoice finance, but please be aware that not all of the lenders listed will offer each of these services. To be deemed eligible, the business must have a borrowing proposal which, were it not for the COVID-19 pandemic, would be considered viable by the lender, and for which the lender believes the provision of finance will enable your business to trade out of any short to medium term difficulty. The business interruption payment means small businesses will benefit from no upfront costs, and from lower initial payments. The government will pay all interest for the first 12 months. Also, please note that the 80% guarantee from UK government is to the lender and not to the business. To comply with the government recommendations around social distancing, and due to the fact that many bank branches are small and may already be busy, it's recommended that you use the lender website to apply in the first instance. Although the application process is open now, as they expect high demand for these loans, the British Business Bank has asked that you consider the urgency of your need before applying. Our next topic for discussion is government-backed loans, known as COVID-19 Corporate Financing Facility, or CCFF. This applies to larger corporate companies and is a way to support liquidity among larger firms and bridge cash flow issues relating to coronavirus. Commercial paper is an unsecured short-term debt instrument issued by a corporation, typically for the financing of accounts payable and inventories and meeting short-term liabilities. The types of companies this would apply to are typically UK incorporated companies, companies with significant employment in the UK, and firms with headquarters in the UK, and companies must be able to prove that they were in sound financial health prior to the pandemic. Applications, along with more clarification on this facility, can be found on the Bank of England website. Moving on then, and it's time to take a look at VAT deferral. The UK government will allow businesses to defer their VAT payments for 3 months, from the 20th of March 2020 to the 30th of June 2020, and all VAT registered UK businesses are eligible with no application required. Taxpayers will be given until the end of the 2020 to 2021 tax year, April the 5th, 2021, to pay any liabilities that have been accumulated during the deferral period. Any VAT refunds or reclaims will be paid by the government as they are now. Our next subject is time to pay arrangements. Any UK company may be eligible to receive support with their tax affairs. HMRC may offer you extra time to pay, and if so, a plan to do so will be agreed. Criteria that HMRC look at when deciding whether to allow a time to pay arrangement include your previous compliance with tax rules and regulations, your line of business or industry, whether you have had a time to pay arrangement in the past, and critically, the current coronavirus pandemic affecting the cash flow of UK businesses. This support is available now. For more information, please contact the dedicated HMRC helpline on 0800 015 9559. Now let's cover income tax deferral for the self-employed. For anyone who is self-employed, income tax payments due in July 2020 under the self-assessment system will be deferred to January 2021. This is an automatic offer. There's no need to apply. This deferral means that no penalties or interest for late payment will be charged during this period, and HMRC have scaled up their time to pay offer to all firms and individuals who are in temporary financial distress as a result of coronavirus and have outstanding tax liabilities, which we will cover next. Next up is business rates holiday. This is a 12-month business rate holiday for the 2020 to 21 tax year. There is no need to apply for this. Your local authority will apply the holiday to your bills. If your bill needs to be reissued, this will be done as soon as possible. Businesses that can benefit from this holiday are those that are used mainly as shops, restaurants, cafes, drinking establishments, cinemas, and live music venues, for assembly and leisure, or as hotels, guest and boarding premises, and self-catering accommodation. For nurseries, properties that will benefit are those occupied by providers on Ofsted's early years register and are wholly or mainly used for the provision of early years foundation stage. As some aspects of business support are devolved, if you're based in Scotland, Wales or Northern Ireland, we recommend you visit your government websites for details of business rate support in your area. So what about grants for SMEs? Let's talk about businesses that receive Small Business Rate Relief, or SBRR. The UK government are assisting those 700,000 businesses in England that already pay little or no business rates due to receiving SBRR, RRR or tapered relief in the form of a £10,000 grant. To be eligible, your business must also occupy a property. You will receive these payments automatically from your local authority, with grants expected to reach eligible businesses by the start of April. If you are eligible for this grant, but are concerned your local authority does not have the right details to administer this to you, contact your local authority directly. On the subject of grants for SMEs, this time cash grants, let's take a look at the retail, hospitality and leisure industry. This applies to businesses based in England within the retail, hospitality and leisure sectors with a rateable value between £15,001 and £51,000. Rateable value, or RV, is a value that's given to all non-domestic and commercial properties used to assess the amount of business rates the property owner or leaseholder must pay. Businesses in these sectors with a rateable value of under £15,000 will receive a grant of £10,000. Businesses with a rateable value of between £15,001 and £51,000 will receive a grant of £25,000. You'll receive these payments automatically from your local authority, with grants expected to reach eligible businesses by the start of April. If you are eligible for this grant, but are concerned your local authority does not have the right details to administer this to you, contact your local authority directly. As previously discussed, some aspects of business support are devolved. If you're based in Scotland, Wales or Northern Ireland, we recommend you visit your government websites for details of small business support in your area. Our final topic is the delay to IR35 reform. Off-payroll working rules, known as IR35, were introduced in 2000 to ensure that contractors who work like an employee but through their own limited company pay the same tax as someone employed directly. Reforms were due to come into place on the 6th of April 2020 that made it the responsibility of medium and large businesses in the private and third sector to determine the correct tax status of these contractors and ensure the correct employment taxes were paid. Due to the pressures of COVID-19, these reforms will now come into place on the 6th of April 2021. That's it for the training content, but before we wrap up, I just want to mention some further support and training options available to you, namely useful HMRC resources, Sage Help Centre and Sage University e-learning. Firstly, useful HMRC resources. For more guidance and business support relating to COVID-19, please follow the links shown on screen. From a Sage perspective, we have both the COVID-19 Hub and Help Centre. This content is regularly updated, so please keep checking it out. And finally, we have the Sage University e-learning, which can be found at www.sageu.com. To help you and your business through these testing times, you now have temporary access to free e-learning materials across selected topics on Sage University for Sage Business Cloud, Sage 50 Cloud Accounts, and Sage 50 Cloud Payroll. With a series of financial support measures on the table, it's worth exploring which ones your business is eligible for and taking steps where required to get the help you need so you can stay on top of cash flow and revenues while also continuing to support your staff. The last thing for me to say is thank you for taking the time to watch this Sage training session on COVID-19 and understanding the UK government help for businesses. I hope you found it useful, and I'm sure I'll speak to you all again very soon.